All right, today we're diving into the story of Bellring Brands. Now, this is a company that they were really on the ropes. They got hit with this perfect storm of supply chain nightmares and just crazy high costs that absolutely crushed their profits. But, and this is the cool part, they didn't just fold. No way. They engineered this incredible comeback. So let's get into it and figure out exactly how they pulled it off. And really, this all boils down to one central question, right? How does a company stare down a crisis that honestly should have completely crippled them and somehow turn all that pressure into a superpower? That's the core of the story we're going to unpack right now. And wow, this chart right here pretty much tells the entire story in just 3 simple bars. You can literally see the V shape of their recovery. So check this out. In fiscal year 22, that first bar, their gross margins just tanked, hitting a low of 29.3%. But then, look at that rebound. The very next year, they jumped all the way up to 34.6%, and they've just kept on climbing. So the question is, how on earth did they do it? Okay, so first things first, let's properly introduce the company at the heart of this whole thing, Bellring Brands. Now, if you're into health and nutrition, you probably know them. They're a real powerhouse in that space, actually spun off from Post Holdings. And their entire business, their whole strategy, is built on the back of 2 massive brands. Yeah, you can really think of them as these 2 massive engines just driving the whole company forward. So on one side, you've got Premier Protein. They're the undisputed leader, the giant and convenient ready-to-drink nutrition. And then on the other side, you've got Dymatize. This is the fast-growing challenger brand that's just tearing it up in the sports nutrition world. This dual-engine approach is absolutely critical to their success, and you're about to see exactly why. But, before we celebrate the comeback, we have to talk about the crisis. Because to really get how amazing this recovery was, you have to understand just how bad things got. We're talking about fiscal year 2022. It was a perfect storm of just about everything that could go wrong, hitting them all at the exact same time. And this storm was attacking them on 2 fronts. First, just total supply chain chaos. They literally couldn't make enough of their product to keep up with how many people wanted to buy it. At the exact same time, you had runaway inflation, which sent the cost of their key ingredients, like whey protein, through the roof. So just imagine that. They're caught in this brutal vice, right? They can't produce enough, and what they can produce is costing them a fortune. And this one number, this really tells you how bad the damage was. Their gross profit margin cratered, falling all the way to 29.3%. That's a drop of more than 4 full percentage points in just 1 year. That is huge. This right here was the absolute bottom of that V shape we saw. This was rock bottom. Okay, so how in the world did they pull off such a dramatic turnaround from that low point? Well, spoiler alert, it wasn't some single magic bullet. Nope. It was a series of really smart, really strategic moves that got their entire business firing on all cylinders again. Now, before we get into the nitty-gritty, we got to talk about a really key concept here: pricing power. You can think of it as the ultimate superpower for any great brand. It basically means your customers love your product so much that you can actually raise your prices to cover higher costs, and they don't leave, they stick with you. And Bellring, well, they were about to find out just how much of this superpower they really had. So here's the playbook. Their rebound was essentially a 3-step plan. First, they finally got a handle on their supply chain issues, which let them unleash all that pent-up demand. Step 2, they put that pricing power we just talked about to the test. They raised prices to fight inflation, and guess what? Consumers went along with it. And third, they really leaned into the combined strength of both of their big brands. Okay, now just take a look at the scale we're talking about here. Premier Protein is an absolute giant. It makes up a staggering 82% of the company's total sales. That's not just a big piece of the pie, it is the pie. It's the bedrock of the entire business, the foundation that everything else is built on. But, and this is where things get really interesting, while Premier Protein was putting up really solid growth, almost 16%, look at Dymatize. It grew at a blistering 25.9%. This is that dual-engine strategy playing out perfectly. You've got the steady, reliable power from the giant Premier Protein, and then the explosive, high-octane growth from Dymatize. It's an incredible 1-2 punch. So, okay, profits are back. Awesome. But you know what? The story doesn't end there. Because what a company does with its money can be just as important as how it makes it. And for Bellring, the mission was crystal clear. Take all that new cash and build an absolute financial fortress. And this quote says it all, really. This was no accident. It was a strategic, deliberate, and consistent choice. As all that free cash flow started pouring in, they made paying down debt their #1 top priority. Period. And you can see that disciplined progress right here on this timeline. Now, this ratio, net debt to adjusted EBITDA, is just a fancy way of measuring financial risk. And look at it. It's been falling steadily year after year. They've taken it from 3.8 times all the way down to just 2.1 times. This is a picture of a company getting healthier, stronger, and safer, quarter after quarter. So, after all that, where does Bellring Brands stand today? Well, they've gone through a complete and total transformation. They've gone from a company that was held back by its own constraints to a company that's become a real force to be reckoned with. And this, right here, is probably the single most important takeaway from their whole story. Before the crisis, their growth was capped by what they could physically make. But now their growth is driven by what the market wants. They fundamentally shifted the bottleneck from their own factory floor out into the open market. And trust me, that is a much, much better problem to have. This is the absolute heart of their comeback. So what this leaves them with is this incredibly powerful set of strengths. You've got dominant brands with now proven pricing power. You have that dual brand growth strategy that's just clicking on all cylinders. They have an asset-light model, which basically means they don't have to own all their factories, and that just lets them print free cash flow. And it's all sitting on top of a balance sheet that is getting stronger every single day. So what's the bottom line here? Look, Bellring has absolutely crushed its production problems. It's proven the incredible strength of its brands, and it's completely fortified its finances. They've gone from playing defense to playing offense. So the really big question now is, with all this newfound strength, what will Bellring Brands build next?